Hi there, this is Hillary the Loan Lady, and today I want to give you some advice for first-time homebuyers or for someone who hasn't bought in the last few years, because as we know, things change all of the time, so we want to be prepared. Okay, so knowing your budget. I get the question a lot from homeowners or future homeowners, what do I qualify for? And so that's kind of a trick question, because I always ask, well, what is your budget? In an ideal world, what would your mortgage payment be every month? Because I may be able to come back and tell you you qualify for a $50,000 a month house payment, and you tell me, no, that's way too much. So the very first thing we need to dive into is knowing your budget. I always ask, if there's more than one person in your family, that you sit down and actually have a conversation about what comes in, what goes out, what things you're saving for, and then what's left over for your house payment that makes you feel comfortable. Because remember, your house is your safe space, and we want to make sure that it's not strangling you, that you're not house poor, that when you come home you feel safe and that it's affordable to you. So the second thing I always talk about is getting your financial house in order. And what that means is, what is your gross monthly income? What is your source of income? Where are your papers that support that amount? Do you have pay stubs that your employer issues you? Is there a website that you go to get those? How do you download a bank statement from your bank? Those are things that you're going to need to know before you apply for a mortgage, because more than likely we will be asking for some sort of supporting documentation. The other piece of this is, have you checked your credit score? Does your credit card offer a free credit score? Have you gone to annualcreditreport.com? There's different places you can go to kind of know more or less what's going on. But don't worry, if you don't have a source, that's something that we'll talk about once you make the loan application. And the third thing that I talk about is, when is the best time for me to apply? So I always recommend applying 6 to 12 months out, just to make sure that you have the right plan for homeownership. So let's say it's May and your lease is up next October. This would be a good time to get started. I talk to a lot of people that say, I'm not ready yet because I'm planning to buy when my lease is up. But my question back is, well, what is your plan? And have you sat down with a mortgage professional to formulate a plan that's actually going to work in order to get you into the house? So the last thing that I always recommend is choosing a lender that you trust. So this is really important, because I see a lot of people saying, well, what is your lowest rate? But the lowest rate might come with the highest set of fees. So it's really important for you to find a lender that focuses on educating you, not only about the process, but about what charges you're expected to have, what rate choices you have, because there's always a choice or a range of rates for you to pick from. And also keep in mind that your lender typically does not get paid until you close on the house. So we usually have a vested interest in seeing this through to the end and making sure that you are empowered with knowledge and the ability to buy when it's time. So I hope this was helpful, and if you have specific questions, please reach out to me directly. Feel free to DM me or call me, and I look forward to hearing from you.